Welcome to Markets in a Minute. My name is Austin Duke. I'm financial advisor and chief investment officer for Diamondback Financial Services. We are a wealth management firm focusing on clients who recognize the need for solid financial advice, who don't want to invest on their own, but still want to be educated through the process. This is the Monday, January 26th, 2026 edition. Let's get started. Investment values fluctuate for a variety of reasons, and our job is to figure out what moves we've seen, why we've seen them, and where we think we're going from here. Diamondback Financial is a long-only investment firm, which means we keep your money invested in the areas we feel offer the best opportunities for growth instead of trying to time the market. We focus exclusively on the traditional investments of stocks, bonds, mutual funds, cash, so we can analyze fluctuations in the stock market and interest rates to help drive our overall investment decision process. So we'll start by looking at the stock market as measured by the S&P 500, and this is an index of the 500 largest companies in America, and it helps us get an idea of what the overall feel is for the mood of the economy as we look at the fluctuations from week to week. So over the last 2 weeks, we actually ended up relatively flat, down 0.08%, which gives us a year-to-date gain of 1.02%. Main drivers over the last 2 weeks was predominantly Greenland and President Trump's attempt to exert some more control over that country or threaten tariffs, etc. So we'll get into that in a little bit, but not a whole lot of anything for us to feel like is going to be a long-term implication for the overall stock market. Next, we look at interest rates as measured by bonds issued through the U.S. Treasury Department. We feel that interest rates really are the preeminent measure of investment risk because interest rates are factored into every investment calculation, including stock valuations. So generally speaking, as interest rates go up, stocks will go down, and vice versa. If interest rates are going down, stocks will go up. We can also look at the spreads between the U.S. Treasuries and high yield corporate bonds as one other way for us to gauge if there is an appetite for risk in the markets or not. So first, as we're looking at the interest rates on U.S. Treasury bonds, we have duration on the bottom axis for 1 month out to 30 years for maturity length of those bonds, and interest rates listed over here on the left-hand side. Each of these dots represents an interest rate for a given maturity length. And the green line is where we ended the 2 week period on Friday. The brown line is where we were 2 weeks ago. So we can see that generally speaking, interest rates did drift a little bit higher for all maturities, but very, very small changes, and even smaller for the 1 year. Basically no change on the 1 year. If we look at the 10-year U.S. Treasury and the price movements we've seen over the last year, the 10-year is most closely linked with mortgage bonds, and just gives us kind of a general feel for where the economy is in general. And it has been in a downward trend over the past year. However, since October, November of last year, it does feel like we are now starting to move in more of an upward direction. When President Trump was threatening to conquer Greenland or place tariffs on the European nations who oppose him, we did see a pretty significant spike here in the 10-year Treasury as a result. But since those comments have subsided, the interest rates have started to drift lower as well. Same with the spreads for our high yield corporate bond option adjusted spread. We can see the spreads were a lot higher back in the tariff initial days of the tariff tantrum in 2025, and really have been pretty moderate here in the last 6 months. Continuing their decline through January, pretty much at the lowest that we've seen since last January. So nothing too much else to report there. We think everything, for the most part, post the Greenland, what I don't know how we're gonna refer to that, but whatever the Greenland issue was, everything seems to have settled down in the days since. Okay, for our recent developments and expectations portion, we'll start with the Department of Justice investigation into the Federal Reserve. So from what we understand, President Trump is not a big fan of Jerome Powell. I think we've widely reported that, and it's pretty widely available in the financial news media. And his term as chairman of the Federal Reserve will expire in May, and we don't think he's going anywhere between now and then. We think he'll finish his term. However, he still has 2 years that he can serve on the board, and we're anticipating that President Trump is trying to get him removed or incentivize him to not stay on the board. They've been renovating the Federal Reserve building, and President Trump last summer went and toured the renovations and made a comment at that time about how much over budget they were with the renovations. And President Trump, being a real estate guy, he's very proud of projects that he's done and always talks about how he's able to do it under budget, etc. So it sounds like the Department of Justice was attempting to get information about the renovations and why they were so over budget. And it sounds like they're close to $1 billion over budget, which I don't know anything about real estate or renovations of these old buildings in Washington, D.C., but that feels like a lot of money to be over budget. So uh, they're alleging information was not given, and now they are seeking more of a legal alternative to get that information. Ultimately, what we think this is about is President Trump trying to find cause to either remove Powell or prevent him from serving on the board. We've already seen him go after another board member, Lisa Cook, and that case is before the Supreme Court because no president has ever tried to remove somebody from the board of the Federal Reserve, and so we're getting the Supreme Court to weigh in, and we don't think it's going to end well for President Trump. We think Lisa Cook gets to stay on the board, and so again, this is another way for him to try and exert some influence over who is on the board. He still has a chairman to pick, and it's still up in the air who that's going to be. So we'll wait and see when that announcement comes and whether or not that person receives the Senate confirmation that is needed. Next, we kind of mentioned it already, but Greenland was the big story in the news for the past couple weeks. We came back from the holiday weekend, and the stock market was down 2% on Tuesday because President Trump was making it sound like he was going to go in and use military force to conquer the island, and he was going to put tariffs on the countries that opposed him in Europe, etc. So he showed up at the World Economic Forum meeting in Davos, Switzerland, and gave a speech that was over an hour long and said he's not going to use military force, but believes that the United States needs to have a bigger presence there. And we are of the opinion that the White House probably has more intelligence information than we do. And if they're saying that there's a credible threat that either China or Russia could take over the island or increase their presence, then I think all of us would agree that that would be uncomfortable. So, if that's what we need to do, then that's fine. But I think it was definitely one of those tense moments. And ever since he uh, walked back from using military force and was able to secure some kind of a framework deal while he was in Davos, the stock market was reacting positively to that information. Other than that, the only other thing that we're watching is what came out just the other day on this massive snowstorm that's going through the majority of the country, and we'll just have to wait and see how devastating it is and whether or not it affects productivity and whether or not people can get to work, etc. We think the timing of this storm should work out as far as not having too much negative impact on economic data. We're pretty much to the end of the month, so it may not be enough to negatively affect the January data, and hopefully things thaw out quickly enough that it doesn't really affect the February data. But again, we'll be paying attention to those. I follow an economics firm, a macro research board, or the MRB Partners, and they put out what do you call this? A research report within the last couple weeks about margin debt and just kind of bringing this to our attention because it could have some negative implications. So margin is where you borrow money to invest in the stock market, for example. And they're pointing out that margin debt has soared to record levels and that the stock market hasn't really followed the margin that has been accumulated. So either the stock market will follow it, which would be beneficial, or if we start seeing the market decline, then people who are using margin to invest would be potentially forced to sell positions to cover the the balances that they owe. And if that's the case, then we could see a more pronounced sell-off if that gets going. So just for clarification, we don't do margin at Diamondback Financial. This is not something that would negatively affect you in that regard. But if we do see a sharp decline in the stock market, even if temporarily, this is one reason why that could be the case. All right, as a final word, we had a different analogy that we were thinking about using, but changing course just a little bit. We had a annual review with a client this week who is dealing with some estate planning issues. Both of his parents and two of his children have all passed away in the last 5 years, and it's a massive headache for those who have had to deal with a loved one passing away and working through either a probate court or just trying to get inheritance passed on to the rightful beneficiaries. It's a very challenging process. It can be, and usually is unless you really have things in order. So we probably don't talk about it enough, but we really are here and exist to help get things in order for you. We all know that there are things that we should be doing and just haven't got around to, but we don't know when we're going to need those things to be in order. So we are trying to really emphasize getting appointments and getting reviews in and whatever we need to get organized, let's get it organized. Let's make 2026 the year to get that done. Um, but that's pretty much all we have. Grateful for your time. Grateful for your trust in us, and we'll continue to keep working hard and reaching out and getting everything in place for you guys so that we can plan for the best and be prepared for the worst. And our tagline again is seeing what's ahead and seeing you along the way, and definitely mean that and want to put that into practice here in 2026. So have a good week, and we'll see you soon.